Hey everyone, it's Andy here from Saving to Invest, and today I wanted to talk to you about the child tax credit and what's happening in 2023. I'm also going to touch on some other popular kiddie or child-related tax credits that you can claim this tax season, one like the other dependent credit, the earned income credit, and the child independent care credit. Now, these are all really common and popular tax credits for children or dependents. And the big thing is for this year and subsequent years is they're all being significantly reduced from their pandemic related expansion. So I'll talk about what's available now and how you can claim this. The child tax credit, which is claimed by many, many families, was significantly expanded in 2020 and 2021 and paid in advance as part of the support for families who'd lost jobs. It was very popular. It actually brought a lot of people and families out of poverty, 65 million children and keeping nearly 4 million people out of poverty. Unfortunately, it was not expanded as part of both the IRA and the latest government spending bill, even though there was a strong push from both sides, but there just wasn't enough political support to justify the high expense tag. So the long and short of it is for 2022 and even for when you file your returns for 2022 in 2023, they'll basically go back to pre-pandemic levels, which will mean that a lot of few people are eligible and the amounts will be much smaller, which will directly impact what people will be getting in their refund checks as well. So I'll talk about what's available now, but just be mindful that this very popular child tax credit is not being expanded to pre-pandemic levels. It's not being paid in advance and will drop significantly. So with the child tax credit not being expanded as it was in pre-pandemic levels, it'll go back to its original levels in 2022 and 2023. But there are some slight changes which will help folks as well. But before I talk about what it's going to go back to this tax filing year, let's just recap what it was during the pandemic expansion. So it was $3,000 for those under six and $3,600 per child who were between 6 and 17. It was paid monthly and in advance, which was huge because it provided immediate help for families that were eligible. It was also fully refundable, which meant that even if you didn't owe a tax liability, you were still eligible for the payment. And this is sort of a very unique feature for these credits where even if you have no liability, you would get this payment, which again supports many low-income households. And during the pandemic, those who lost their jobs, this was very helpful. And you know, people qualified for full if they were earning less than 75K as a single or as 150K as a married household. Obviously, this was a very generous credit. The way it was set up, a lot of the criticisms, especially from the Republican Party, was that it disincentivized people or families to work, especially if they had multiple children and they could be getting $10,000 in payments, even though if they didn't have a job, because this was fully refundable. So this was some of the rationale behind why it didn't get the broad political support to be expanded, even though it did help millions of children and families. So what happens now in 2022? So when you file your tax return this year, it will go back to pre-pandemic levels. What this means, it's going to be $2,000 for all children under the age of 17. Again, it has to be for qualifying children or dependents that the IRS has laid out in their test, and I'll post a link for the whole description for how the criteria around that is. But it can only be claimed via your tax return as well, so it won't be paid in advance, which was a big feature of the pandemic expanded CTC. So you'll claim it like you did for the pre-pandemic years in your tax return. You will have to show at least $2,500 worth of earned income to get any part of the child tax credit, and then you can claim the full tax credit if you earn above below 200K to 400K, and then phases out if you make more than 240K to 440K. So there's a top range, and again, I'll put the full table below. But the big thing, which is also important for families that don't have an income or don't have enough tax liability, is that only $1,500 of the child tax credit is refundable. This is known as the additional child tax credit, and I'll post the link below to talk about the differences between the ACTC and the regular CTC. But it means that if you don't have a tax liability, you can only get back 1,500 of the $2,000. So 500 is non-refundable, which will mean that this will be smaller for a lot of families, and especially with the income levels pretty high, a lot of families will qualify, but the amount would be smaller there as well. So while the child tax credit gets a lot of the headlines because it is probably one of the most widely claimed tax credits, there are lots of other kiddie and dependent tax credits that you can take advantage of. Some of the more popular ones are the other dependents. So for those families who don't qualify for the CTC for whatever reason, there also is the other dependence credit. This is a $500 tax credit. Again, this doesn't mean child dependents. It could mean adult or senior dependents that are reliant on you, and you claim them as a dependent in your IRS tax forms. Again, if you use tax software, most of them will help you guide you through the credits you will be eligible for based on the dependent information you enter. The other big one that is claimed for your dependents and is pretty significant, up to $7,000, and more importantly, is a refundable tax credit. So you get it even if you don't have an income tax liability, is the earned income tax credit. This actually has probably expanded for most categories from the pandemic, except for those who didn't have children. It's sort of those levels were changed, and I'll post a link with the details around that. But this is a very popular tax credit as well. In fact, it's so popular that the IRS has mandated that people claiming this have their refund delayed so that additional verification can take place. Same as the refundable portion for the child tax credit, which is the ACTC. If you're claiming that, the IRS, under what's known as the PATH Act, which I have a whole video on as well, can hold the tax refund for your entire refund, just so it has to verify that you can claim this because, again, you don't have to have income to get paid this refund. So there's a bit more checks required because there was a lot of fraud around people claiming this. And the other one is the child and dependent care credit. So this is again to cover child care expenses mainly. Obviously, there's also senior dependent care expenses, but this saw a big drop because during the pandemic, a lot more people needed support. So this is going down from $8,000 in 2021 to $2,100 this year, and there's also some income qualification changes as well. And I'll post a full article down there. But these are some big credits as well. And during the year, just pay attention to all the tax credits. A lot of them have changed from 2021 when they were expanded and funded through the various pandemic bills. So they'll all be lower this year. And this is also why the IRS has said that most people will probably see smaller refunds than they did last year as well. Hopefully, this quick recap was useful to you and you were able to get some more information ahead of filing a tax return. I'll appreciate it if you hit the like button and keep subscribing to get more videos like this. Thanks.